Good evening, everyone. Time for another silver update. Now, this is the 1-minute chart of silver provided by netdania.com. You can click on the link below. And this is the period of time when the silver fix was introduced. You can see that it goes back to the 15th. But this big drop off here, this was on the day of. And what really stood out to me is this somewhat bizarre behavior, market behavior, even more bizarre than we've seen in the past. We'll scroll in so you can see the candlesticks. So this type of activity here, where you have a gap down, no volume, or, well, I don't have the volume on here, but it's strange volume. And then you have this whipsawing back and forth. And that's not as strange as what we have over here. You can see here in these blue candlesticks. This type of activity here, this isn't a real market. Now, someone might say, well, it was just thin trading or something like that. But I have not seen this type of thing before. And you can see it now here with these blue candlesticks. Very, very strange activity. And we're talking about from about 50 to 55. So only about a 5-cent move. But again, this does not appear to be a real market. And I think we're going to see when we look at the article from Mark O'Byrne on Goldcore that this really is a fake market and they're actually taking it to a new level. So this is the article, New LBMA Silver Price. I'm still not transparent. I'm going to go through this and I'm going to jump out to show a few things here. But this is an excellent article. I don't have time to go through the whole thing. I'm going to try to go through the highlights. Now this is the executive summary. New LBMA silver price process began today at 12 o'clock using electronic auction process run by CME. We know about them. LBMA silver price today was 1986. Silver fix was 1986. Only 3 participants to begin with: HSBC, Scotia Makata, and Mitsui. We know HSBC. These are the drug money launderers. We know Scotia Makata. This is the guys who ran out of silver in their vaults. Mitsui, that's a Japanese bank. Not really sure why they're involved. Volume stood at 525,000 ounces on the sell side, 325,000 ounces on the buy side. Thomson Reuters. Administration and governance of the new LSP being managed by Thomson Reuters. We're going to look into them. LBMA owns the intellectual property rights of LSP and will accredit market participants. Silver market nervous as full list of participants is still unknown. Traders nervous since new system platform looks unwieldy and unintuitive. Banks, other users of silver benchmark rushing through the legal compliance and IT changes. LBMA consultation in the last 3 months has not been transparent. LBMA online survey results didn't adequately explain the answers to the questions asked. LBMA presentation seminar June 20th, held behind closed doors under Chatham House rules. Rationale for choosing CME Reuters not adequately explained beyond generalisms. Independent review of new silver price process conducted by ex-Barclays director while Barclays was rigging the gold price. CME Reuters declined to publicize winning submission slide presentation on LBMA site. LBMA silver price consultation process was not transparent. New electronic pricing mechanism not transparent, lacks regulatory oversight. So let's get into this. In fact, the new official name of the process was to be the London Silver Price, LSP, as opposed to the previous title, the London Silver Fixing. Notably, the word fixing is no longer in the description for obvious reasons. The website of the London Silver Fixing Company, www.silverfixing.com, is down either due to an increase in traffic or having been switched off since it's currently inaccessible. The LBMA, commenting on why the benchmark name changed just today from the London Silver Price, said that, quote, unfortunately that name was not able to be trademarked, and therefore in order to protect the bullion market's intellectual property and ensure recognition, that is the daily silver spot price for the London bullion market. The name has been changed to the LBMA silver price. Thomson Reuters remains the benchmark administrator. The name is to reflect local London and the LBMA's ownership of the intellectual property. When the London Silver Market Fixing Company announced on the 14th of May that they would cease to administer the existing silver fixing process on the 14th of August, a 3-month notice period, the London Bullion Market Association immediately stepped in on the same day and announced that the LBMA would be launching a consultation, quote, in order to ensure the best way forward for a London silver daily price mechanism. It's not entirely clear how the LBMA could know to step in at such notice on the 14th of May and begin an uncontested consultation process less than a few hours after an entirely separate organization, the London Silver Market Fixing Company Limited, announced that they were bowing out of the process. Perhaps the two organizations are not as distinct as they maintain to be, you think? The overlap in Bullion Bank membership of the two organizations attests some very close connections. Throughout the new silver pricing consultation between mid-May and mid-August, the LBMA have maintained that they have been striving for transparency, but the process has been anything but transparent. During the last few days, it has become apparent that the entire formulation and implementation of the new silver pricing process appears to have been rushed through, with market participants now fearful that A, they won't understand the new system since it's not user-friendly. Now I wanted to show you, he's going to quote from this Ross Norman article. This is screenshots from this new silver quotation system. Now this, you can see here, he says it looks like something out of DOS. Meanwhile, the design quite retro in a DOS sort of way. Clive Sinclair would be impressed with catchy descriptors, etc. But I mean, seriously, that's it? That's the new system? That's a joke. It may not be able to provide a silver price benchmark for the myriad users who are depending on a silver price benchmark in order to price and hedge their silver products and act as a reference point for their contracts that previously used the existing London silver fixing price. Indeed, the LBMA have just updated their website regarding the newly selected administrators and governors of the silver price process, CME Thomson Reuters, stating that the process has been undertaken quickly and efficiently, but the tight schedule and the time of year has imposed time constraints on some potential participants seeking internal sign-off on the necessary credit, legal, compliance, and IT requirements. This means that not all those who have participated in the live trials will be accredited in the time to participate on the 15th of August. This in itself is ludicrous. Why, given the time of year and the tight schedule, have the LBMA tried to railroad these changes through right now? There have been no public explanation as to why they have continued to try to push through this new process, especially in the last 2 weeks. This morning, August 15th, for the first time, the LBMA published the names of the accredited participants in the new process. It is highly irregular that they have left the publication of the participants list until a few hours before the very first ever new silver price setting process. The LBMA states hopefully that they expect this participant list to grow over the coming weeks, but the question remains, why were the LBMA exclusively involved in this whole process in the first place from the 14th of May, and why are they now rushing through a system that the market appears to have doubts about, using a consultation process that was far from transparent? During the past week, silver market participants have been more than scathing about what they see as ill-preparedness by the LBMA and the winning bidder, CME Thomson Reuters. Now we know about CME. Let's look at Thomson Reuters. Thomson Reuters comes from the Thomson Corporation, and we know that they merged with Reuters Group. Basically, the Thomson Corporation is a seller of information. What they do is they document and create databases, and they basically have private information databases. You can see if we go down here to the bottom where they list all the things that they do. They control Westlaw, FindLaw, Barbary, physician's desk, reference, tax and accounting. So this is a private information company. Why would you choose a company who's in the business of selling information and controlling information and choose them to be the people that are in charge of this process? So that really stinks. For example, last Tuesday, the 12th of August, Ross Norman, a veteran precious metals trader in the London markets and a colleague of many other experienced precious metal traders, said that, quote, it remains a mystery who will be taking the fix orders with a deafening silence from market participants. Norman also highlighted the totally bizarre change in the standard of silver order in the new system, which has gone from US dollars per ounce to a unit of lakh, which is 100,000 ounces. Now let's take a look at this lakh. This is a term that comes, well, it says it's the South Asian numbering system equal to 100,000, but it's really an Indian numbering system. I'll show you here. If you go to Google Trends, before we do that, let's take a look here at this comment. This is interesting. Wikipedia here is updated. You can see that, well, lakh is used, it's not just in India, it's not just in Pakistan, it's actually used in the precious metals market. So I thought, well, that's interesting. I'd never heard of this term being used in the precious metals market. Let's look here. The term lakh is also used in the international precious metals market. 1 lakh equals 100,000 ounces of precious metal, such as gold or silver. So we've got a note here. Footnote 1 goes to FT. And that's from August of 2014. And guess what? FT is a private information site as well. So that is very strange. This, to me, is probably the biggest story of this entire silver fix, that they would choose a term that comes exclusively from India. Now let me show you that this is exclusively from India. This is Google Trends, and this is the term lakh. You can see here the term is increasing in use fairly steadily from 2009, but look at the news stories. Times of India, Indian Express, IBN Live, Economic Times of India, Business Standard of India, Indian Express, NDTV, that's India, Times of India, and Financial Express of India. So this is exclusively, you can see there's the country highlight, India and Pakistan. Why did the LBMA choose this term and this amount? Is that a hint that the pricing and trading of precious metals is going to move east, and they're preparing for that? Ross, who began his career working for Sir Clive Sinclair of Sinclair Research in Cambridge, even likened the user interface of the new CME Thomson Reuters silver trading platform to something from a command prompt MS-DOS user interface from the 1970s. He also pointed out that what to us looks like a conflict of interest for Reuters, that to follow the new silver setting process in real time, one needs to purchase a subscription to the Reuters Icon or Electron platform, and given that Thomson Reuters is responsible for administration and governance of the new price setting process, they will also benefit from users signing up to these platforms in order to follow the silver auctions. The new auction platform was not favorably received by various London-based precious metals traders, as relayed by Ross Norman, but the language used was quite colorful, so we will leave it to readers to search out these references. So I'm actually going to have to continue with this one because this is an excellent article, but you can see from what I've shown you so far that this is anything but a free market, an open market trading system. Now, one of the things that I wondered about is, how do they price other commodities? For example, let's look at copper. How do they price copper? Well, we can see here that copper is priced by an open outcry system, and it's traded on the NYMEX. You can see that here. But the exchanges are the futures contract for copper is traded at the New York Mercantile Exchange, the NYMEX, through its commodity exchange, COMEX division, and London Metals Exchange, LME. So I don't think that it's probably in the rest of the world's interest to allow the United States and Britain to set the price of commodities for the entire world. And that may be why there's this hint at the lock from India. But at least copper is priced in an open outcry market. Why can't silver be priced in an open outcry market? So they've created this system, and I will say this is a fake system. As Bixweir has pointed out, there's no method of delivery described. There's no real silver being traded. This is just literally a silver fix, and it's amazing that the people in the world would listen to these criminals. And these are banking criminals, HSBC, etc. And these people are telling us what silver is worth. So that says everything to me. It's the same players. It's the same system. It's clearly rigged. This is going to be very exciting because they might be able to take the price down to that 15 that I've been predicting using this new fake market. We're definitely going to see in the next coming weeks, and we'll talk to you next time.